PayPal gives us a preview of just exactly what a central bank digital currency will look like. The Bank of England promises to end QE on the 24th, but in the meantime is absolutely doubling and tripling down to save their pension plans. And meanwhile, the Federal Reserve announces that it's business as usual.
This podcast is for information and entertainment purposes only. Nothing on this podcast should be construed as financial advice. All views expressed on this podcast are solely the opinions of the host and/or any guests that we might have from time to time. Nothing on this podcast should be construed as a specific inducement to make a particular investment or to follow a particular investing strategy.
Hello, you sexy sat stackers, and welcome to the Bitcoin Bulletin Podcast. You know, it seems like things are just getting crazier and crazier out there. I know I'm hesitant to call peak clown world, as Marty Bent has done several times on his podcast, but it just seems like we are definitely through the looking glass, at least when it comes to the news and the financial news. And so perhaps it's quite ironic, or at least apropos or fitting, that I went to the Weird Al Yankovic concert last night. And certainly his lyrics are no sillier than what we're seeing coming from our elected politicians and our federal banks, our central bankers around the world. Before we get into that real quick, today is Wednesday, October 12th, 2022. This is episode number 75 of the Bitcoin Bulletin Podcast. And of course, today is DCA Wednesday. We're going to be making our 64th dollar cost averaging stack. Before we get into any of that, though, a real quick look at the vital statistics. At the time of this recording, we are at a block height of 758,395, and Bitcoin is still on sale, ringing in at $19,178 US per Bitcoin, down just a smidge, well, down almost $1,000 from last Wednesday, but right in that $20,000-ish range that we've been stuck in basically since June. And of course, $1 US will get you 5,214 sats. That's 5214 Moscow time. If you value your wealth in gold, it will currently cost you 11.5 ounces of gold to buy just one Bitcoin. That is a little cheaper in gold terms than it was the last 2 weeks, when it would have taken 11.8 ounces of gold to buy one Bitcoin. And that is not because gold has gone up in US dollar terms. That's because we are seeing the US dollar value of Bitcoin sag, because gold is not performing any better than any other asset out there. In fact, so much for Peter Schiff's 5,000-year store of value, because it remains down on the week, the month, and the year. I think you have to go to the 5 or 20-year range before you would have made a return on gold. And of course, that gold return completely pales to the more than 1,000% return you would have gotten holding Bitcoin during that time frame, during less than that time frame. Bitcoin hasn't even been around 20 years. Nonetheless, one Bitcoin will currently buy you 1,149 Papa John's pizzas. That is a lot of pizzas, certainly a lot more than Laszlo got for his 100,000 Bitcoins that he, when he famously made that first real world transaction of Bitcoin for a real world good, buying 2 Papa John's pizzas for 100,000 Bitcoins all those years ago. Well, today, one Bitcoin will feed a family of 4 once a day for almost 4 years. So the price of Bitcoin in Papa John's pizzas is near an all-time record high still. If you value your wealth in oil, it will cost you 207.71 barrels of oil to purchase just one Bitcoin. That is at a price of 481,408 sats per barrel. And for those of you following the market capitalization of Bitcoin, Bitcoin's market cap is currently $367.7 billion. That is still a really impressive valuation, despite the fact it's nowhere near that $1 trillion valuation that we hit when Bitcoin set its all-time record high last fall. But nonetheless, 367 billion puts it up there with some of the world's most valuable companies, although nowhere near as high as the top 5 companies by market cap. For example, Apple has a current market capitalization of about 2.65 trillion, Microsoft at 2.1 trillion, Google, Alphabet at 1.5 trillion, Amazon at 1.4 trillion, and even Tesla at 910 billion. So if you're comparing Bitcoin as an investment, if you're comparing Bitcoin to some of the top stocks out there, I think it's safe to say we're still pretty early, at least in terms of Bitcoin's current valuation. All right. For those of you who know that my favorite metric to follow, and I'm not really a T&A guy, but a TA guy, but the metric that I've been following this entire podcast is Bitcoin's 24-hour transaction rate, and that is exactly the same as it was last Wednesday, ringing in at 3.13 transactions per second. That is below that magic number I like to see of about 3.14 transactions per second, but still above 3 transactions per second. And it seems like, at least during the time I've been doing this podcast, Bitcoin is really at its weakest when trading volume, transaction volume that is below 3 transactions per second. So we remain in that anemic range, but not in that Bitcoin is crashing range. There are currently 3 blocks worth of transactions pending in my mempool, and part of that is because it's been over 30 minutes since we've seen the last block come in. So there are a bunch of transactions pending, but if there had been a block every 10 minutes for the last 30 minutes, they probably would have all been cleared out. So the mempool is not getting too bloated. Along those lines, 1 sat per byte transactions should still clear within a day, although my fee estimator is currently recommending a fee of 7 sats per byte to guarantee that your transaction is included in the next on-chain block. That's up a tiny bit from the 5 sats per block last week, but that was the cheapest we'd seen it in 4 months. So 7 sats per block is still really cheap, and I personally would feel comfortable putting in a 1 sat per byte transaction. It says it would clear within a day. It would probably clear a lot faster than that because transactions have been humming along quite a bit. And that is despite the fact that we just had one of the largest difficulty adjustments I have ever seen. I don't know if it's the largest because I don't have those stats in front of me, but the difficulty to mine a new block of Bitcoin was increased by 13.6% since our last podcast. That is because Bitcoin's hash rate was at an all-time record high again. As we spoke about last episode, Bitcoin's hash rate increasing has usually been a fairly reliable leading indicator of a coming bull run. The hash rate tends to increase before the next bull run begins. It doesn't necessarily mean bull run is imminent, because I'm still a firm believer in that 210,000 block theory and that 4-year halving cycle being what drives Bitcoin's bull runs. It's boom and bust cycles. We are currently 1,637 blocks away from the next mining difficulty adjustment. As you know, Bitcoin is programmed to adjust its mining difficulty every 2,016 blocks, which is theoretically every 2 weeks, but it's been a little faster than that because hash rate has been increasing and blocks have been averaging faster than 10 minutes. And while 1,637 blocks out is still probably too long to get an accurate picture of what the next difficulty adjustment looks like, that's still more than 10 days away. It's currently being forecast that we're going to have another difficulty mining increase of anywhere from 2.92 to all the way up to a potentially 8% difficulty increase. So if hash rate keeps coming online, then the difficulty to mine a new block and the security of the Bitcoin chain is going to keep going up, keep improving. And that is because currently blocks are averaging 19 minutes and 14 seconds. Obviously, that's faster than 10 minutes. And that, of course, does take into account, well, it doesn't take into account that it has been 33 minutes and 36 seconds now since the last since the last block was found. So it's too early to tell. But the one thing that is for sure is we just had a huge difficulty increase, difficulty adjustment of 13.6%. Bitcoin's hash rate is as strong as ever, although it hadn't consumed all the world's electricity by 2020, as the doomsayers were saying during the previous halving cycle, the previous bull run, the 2017 bull run, when Bitcoin should have already ended the world because of its electricity usage. All right, real quick, again, I want to say thank you to those of you listening on your favorite podcasting 2.0 app, such as the Fountain app and the Breeze wallet. Once again, we do not have any boosts to read since the last episode, but thank you for those of you who are supporting us via podcasting 2.0, and there are a few of you out there, so thank you very much. Okay, let's get into the nitty-gritty. The Fed released its minutes from its last meeting today, and basically it's being reported that the consensus is that their thought is that, quote, the cost of doing too little outweighs the cost of doing too much, meaning that they say they're going to stay the course, that they're going to keep increasing interest rates to try and get inflation under control. And remember, of course, this is all BS. Inflation was not caused by federal interest rates, by the Fed's interest rates being too low, but by the 7 trillion additional US dollars that have been printed since 2020. Reminder, it was Milton Friedman that said, quote, inflation is always and everywhere a monetary phenomenon, in the sense that it is and can be produced only by a more rapid increase in the quantity of money than in the output. And we certainly had a more than rapid increase in the quantity of money, with $7 trillion being printed in just the last 2 years. Obviously, when there's more money chasing the same goods, that means that dollar is worth less. It isn't necessarily that the cost of milk has gotten more expensive. It's that the value of the US dollar is worth less. And you hear that the US dollar is strong, but that is only in that it is strong against other world currencies. Inflation is a worldwide phenomenon. Just the fact that the dollar is stronger than the pound or stronger than the euro doesn't mean the dollar is strong. The dollar's value has been cut remarkably, and that is reflected in that 10% inflation that we see worldwide. Can the Fed lower prices by jacking up interest rates? Maybe. It is possible that the Fed can lower prices, but the only way they can do that basically is by destroying the economy. And that's what they're trying to do by raising interest rates. The theory is they want to put millions of Americans out of work. What the metric they're looking at to justify raising rates again is the unemployment rate. And they consider that, the employment rate in the United States is strong, despite the fact that there's millions fewer Americans working than there were prior to the pandemic. But their metric is they want to see unemployment go up. Because, of course, if unemployment goes up, if you don't have a job, if you're poor, you can't buy as much, and therefore that affects supply and demand, right? If you can't afford to buy food, then there's less demand, and supply and demand, meaning there's less dollars chasing those goods, would tend to maybe bring prices down. But, if history is your guide, inflation can last a long time, and the Federal Reserve policies, for example, in the 1970s, didn't really have any effect on inflation whatsoever. We saw inflation peak, and then we saw it fall a little bit, and then people claiming victory, but it only went right back up, and basically it zigged and zagged for 10 freaking years. And hopefully that's not the case, and hopefully our Federal Reserve isn't really intent on cratering the economy to try and get inflation under control. If you remember that famous scene in the movie The Big Short, the just don't dance scene, where he says that, for every 1,000 people that are unemployed, X number of people die. And on a previous episode, I actually broke that down, and we showed some studies out there, some university studies that show that that's true, that thousands of people die per every percent that you increase unemployment. So keep in mind, when they're trying to crater the economy, when they tell you their goal is to increase unemployment, to dampen the employment in the United States, they will be killing people. And that's just fucked up. Pardon my French. Of course, The dollar milkshake theory is still in play because we're seeing that the rest of the world's currencies are absolutely cratering. The rest of the world's economies are tanking a lot harder than the value of the U.S. dollar. Inflation is worse in Europe than it is in the United States. And as Jeff Foss has been, well, he's been on all over the place. I've heard him on 3 or 4 different podcasts, making the point that Canada will fail years before the United States fails. The dollar milkshake theory being that the milkshake is all of the world's dollars, and the U.S. dollar is the straw in the milkshake, and basically the U.S. dollar is going to suck all the other dollars out of demand rush from other currencies into the U.S. dollar, and that's what we're seeing. The demand for the U.S. $100 bill is pretty much at a record high compared to other currencies, as people panic about inflation and the destruction of their currencies, which will fail before our current currency ultimately fails. But that doesn't mean that it's going to be roses in the United States. It just means we're going to get hit less hard than the rest of the world, and our dollar will collapse after many other currencies do first. All right, well, this is going to be fun. I just had my first massive glitch that I've had with the Anchor FM app this is the first time in 75 episodes. But apparently, about 17 minutes in, the app disconnected somehow and just stopped recording. My first clue was after about 45 minutes of what I thought was a pretty decent rip, it wouldn't let me hit the stop. And I ended up letting it run out because it will only let you record a maximum of 60 minutes per segment. And then when it ran out, I went back in and I saw that it had saved part of the recording, but it had saved less than half of it. Not to worry, we did already do our DCA stack. I'll go back over it. Unfortunately, we won't be doing it in real time because, we did, but it didn't get saved. So where it cut off was right after I got done talking about the dollar milkshake theory, which if you are listening, and hopefully this was seamless enough, you probably wouldn't have noticed, other than I just interjected this explanation of the glitch we had. So anyway, the United States currency will eventually fail, as all fiat currencies do, but it will fail after other currencies do, and that's where we were. I don't think we had gotten into the Bank of England. Obviously, the Bank of England, last week we mentioned that they had reinstituted emergency quantitative easing because their pension plans had been margin called and were a significant number of them, a substantial number of them, were on the brink of failure because of those margin calls. And the BOE instituted some bond buybacks to prop up those pension funds. However, they have since said that they are going to end their quantitative easing in 2 days on the 14th of this month. And they reaffirmed that with a statement on the Bank of England's website today, saying that they insist they're going to be ending their QE in 2 days. But until then, they're essentially doubling down with their headline on their website saying, Bank of England announces additional measures to support market functioning. Apparently, there are still pension funds that are on the precipice, and they're urging all of them to take advantage of their quantitative easing, of their bond buybacks or gilts, whatever they call them in England, buybacks before Friday, because a super secret squirrel promised that they will be ending that on Friday. All right, we already spoke about inflation a little bit, but today, September's producer price index was released. That's wholesale inflation, and wholesale prices rose by 0.4% this month, or in September, the last month, which was double the 0.2% expected. Of course, CPI will be released tomorrow. Everyone knows that's a heavily massaged, a heavily manipulated number. If things get too expensive, they just change what's in the metric. They have their basket of goods. And, the famous example that Safety and a Moose says that if the price of steak gets really expensive, they just substitute in ground beef or chemical soy patty and say that is the new good that people would be purchasing. And voila, inflation doesn't exist or is less than what it would have been had they kept the basket of goods the same. That being said, CPI is still expected to have risen 0.3% in September, and that would bring it to an annual pace of 8.3%. That's up from the 8.1% that it was at last month. That that had dipped briefly to 8.1%, if you can call that a dip. I guess we'll see, because they were wrong about wholesale inflation, so we won't know until they release that number. Nonetheless, the consensus still remains that the Fed is going to be raising interest rates another 75 basis points in November, because even though the rest of the world's currencies are tanking, they are just concerned with what's going on in the United States, and they flat out do not care about the currency crises in the rest of the world. Also, in the last couple days, there was one heck of a fiasco involving PayPal. PayPal had been in trouble anyway. As you recall, they had massive layoffs a few months back. A good friend of mine that had worked for PayPal for like 20 years or more was part of those huge layoffs. So PayPal was already in bad shape. But for inexplicable reasons, in what I bill as a prelude to what a central bank digital currency will be like, they posted an updated terms of use policy that was supposed to go into effect November 3rd, where they will fine users $2,500 per occurrence for posting any content that is hurtful, inappropriate, misleading, false info, basically at the sole discretion of PayPal. Obviously, that created a huge uproar, and thousands of people who still have PayPal accounts have posted that they were canceling those accounts, closing their PayPal accounts, and that led to a massive backpedal from PayPal, putting out a statement saying that an updated updated terms of service policy notice recently went out in error that included incorrect information. The spokesman said that PayPal will not be fining people for misinformation, and that this language was never intended to be inserted into their policy. Basically, they said that we have no idea how that got in there. We would never have put anything like that into our terms of service that, an entire team of lawyers goes over with a fine-toothed comb numerous times before it ever gets to the point where it's been signed off on and released to the public. So, yeah, BS, guys. And maybe that's the final nail in the PayPal coffin, because PayPal was a dying company anyway. Basically, once the umbilical cord between PayPal and eBay got severed, PayPal kind of became obsolete. And that's the only reason anyone I know ever used PayPal in the first place, was because you needed PayPal to buy things on eBay back in the day. But that is not the case anymore, and PayPal's been a dying company ever since. However, thank you very much, PayPal, because you gave us a preview of exactly how a central bank digital currency will be used. When money is programmable, they will be using it to fine people. If your social credit score isn't correct, if you say something to the wrong person or you say the wrong things, they can just take your money. And it will be a lot easier for the government to get away with it than it would have been for a private company like PayPal to get away with it. Don't forget the CBDC, at least according to the World Economic Forum and to Klaus Schwab, the Bank of International Settlements, they're bragging over the fact that they will have absolute and total control to the minutia of what you can spend your money on. A CBDC will allow them to prevent you from purchasing goods that they deem that you shouldn't be purchasing. In fact, they even bragged that your employer will be able to put restrictions on how you can spend your money, that if your employer doesn't want you spending money in a certain way, that they can restrict you from doing that. Just look at what happened with the Canadian trucker convoy, where they froze all the donations that were going to the truckers, and then went after anyone who even made a donation, labeled them as domestic terrorists. Imagine how much easier that will be when there's no cash one day and you're using a central bank digital currency that they can program to expire, that they can program in advance that you won't be able to donate to causes that they disagree with. So we just got a huge, even the normies, people that don't even know anything about Bitcoin, have never even heard of a CBDC, just got a huge wake-up call from PayPal. So thank you for stepping on your dick. Thank you for that fuck up, PayPal, because I think that was a huge wake-up call to normies out there, to people that haven't even been orange-pilled yet, and thank God for Bitcoin. All right. I know it seems like a lot of doom and gloom out there, and a lot of people are downhearted by the fact that the price of Bitcoin has crashed all the way to $19,000, $20,000. How quick we forget, how soon we forget that just 4 years ago, Bitcoin was only $3,400. that it had never been $20,000 in the entire history of Bitcoin. People were feeling burned for buying it like 12 or 15,000, and then it popped back up to a new all-time high of 69,000. And of course, Bitcoin being Bitcoin and the 4-year cycle repeating once again has crashed once again. If you remember, in 2018, Bitcoin crashed all the way down to $6,000 in June, pretty much stayed there until November before there was a final capitulation to $3,400-ish. And of course, that was kind of a black swan-like event because, there were the hash wars. We basically had bad actors trying to attack Bitcoin, and that was the catalyst for that final dump down to 3,400. But even then, we had people in the know, big names, OGs like Tone Vays, saying that Bitcoin was going to go even lower, predicting that Bitcoin was going to hit $1,000 a coin before it recovered. And of course, it never did. And people that were waiting for Bitcoin to go lower that missed out on buying at 3,400, well, it's 20-some thousand now, so they're kicking themselves because even 3,400, waiting to buy it, waiting for it to go to 1,000 before they bought, ended up costing them. And I think that's kind of a situation that we find ourselves in right now. Bitcoin may go lower. Who knows? I don't have a crystal ball, but it also may not. And one thing is for sure, if the 4-year cycle, holds, if it repeats again with the 2024, halving and the next bull run, you're going to feel awful silly if you could have bought Bitcoin at 19 and you're waiting for it to go down to 15 or 12 or what some people out there are claiming it will ultimately dump down to before we truly hit a bottom. Don't be wishing you had purchased $19,000 Bitcoin when Bitcoin is at 70, 80, 100,000. Because as you remember, after it did hit that $3,400 low, it pumped again to around 10,000 and then bounced between around 10,000 and 6,000 until the 2020 halving. And it didn't really begin a climb above 20,000, or correction, above 10,000 until around November of 2020. And then it really began ripping around Christmas. I remember distinctly because I think the first time Bitcoin broke that $20,000 mark was on December 20th, because the dollar value was coinciding with the day of the month. It was 21 on the 21st, 22 on the 22nd. It hit 25,000 on Christmas, and then just went on that face melting rip to 64,000 on the news that Elon Musk had purchased and that Tesla was going to accept Bitcoin for payment. And I think possibly that was maybe a little bit of a premature rally, which maybe is why we saw that dip and then that second all-time high when Tesla backpedaled and said they were no longer going to accept Bitcoin as payment because Bitcoin wasn't green, bowing to all that ESG FUD. Nonetheless, if history repeats itself or even rhymes, that means that we're potentially going to go sideways for a while. And maybe Bitcoin goes a little lower, maybe it doesn't. But the one thing that is for sure, if history repeats itself, is that the 2024 halving is steadily marching towards us. And basically after every halving, 6 months to 18 months after that halving, Bitcoin has set a new all-time high every time. So if you're worried about, do I buy at 20,000 or do I wait for it to go lower? Well, when Bitcoin goes blasting past 69,000, will you be feeling regret that you're not stacking right now? And that is the question you should be asking yourself. And along those lines, Plan B continues to draw comparisons between the previous bottoms and the current price situation, tweeting just this morning that 50% of all 19 million Bitcoin is in loss, similar to January 2019 bottom and August 2015 and October 2011. So he's been calling a bottom. Many people have been calling June the bottom. Who knows if that was really the bottom or not? But the evidence is starting to mount that we're in a very similar position to where we were during the last quote-unquote crypto winter, during the last Bitcoin bear market. Along those lines, Plan B also tweeted this morning, quote, It's only recently that people started complaining about the correlation between Bitcoin and the S&P 500, only since they both decreased in value, but the correlation has always been there since the S&P 500 increased from 1,000 to 4,000 and BTC from $1 to 20,000. Both will rise again. And that's an excellent point because, people are worried to death that Bitcoin might not recover, but everybody pretty much assumes that the stock market, it may continue to go down, but eventually it'll set another all-time high companies like IBM and Ford and General Motors and General Mills and Dow, the big blue chip companies will be there for the long term, and there will be a time when their stock markets, their stock prices set another new all-time high. And I think he's making the point that Bitcoin will as well, that correlation isn't necessarily a bad thing, and that, quite frankly, what we've seen is it's an everything correlation. It used to be that people would say, like, gold or bonds were a hedge, a store of value, a hedge against inflation. Remember the 60-40 portfolio, where they used to recommend that you put a certain percentage of your investment in bonds, because when the market crashed, bonds would make up for it, and they would preserve your wealth. Well, we've seen that's certainly not the case with both Bitcoin and bonds, absolutely in the toilet right now. So, this is been an everything crash this time around. And so it's important to remember that, we're still early. Bitcoin did have that 1 trillion market capitalization at its all-time high, and it can get there again. If you look at just the top 5 companies by market cap, remember a couple episodes we went over those. Apple had a 2.65 trillion market capitalization. Microsoft had a 2.1 trillion market capitalization. Alphabet or Google had a 1.54 trillion market capitalization. Amazon, 1.4 trillion. And even Tesla had a $910 billion valuation. If people put just as much money as they put into Tesla stock, Bitcoin would be back at its all-time high. So Bitcoin certainly has a long way to go. You ain't seen nothing yet, as the saying goes. And you should be looking at this as an opportunity to stack sats on the cheap, because, TikTok next block, that next halving is coming. It's coming faster than you might think. 4 years ago, or it was 4 years away before the last bull run. Now it's less than 2 years away, and it may seem crypto winners, Bitcoin's bear markets might seem like they last forever, and certainly the crypto winter of 2018, 2019 felt like it lasted forever. But now we've kind of forgotten about it. And, the euphoria was there again as Bitcoin blasted to a new all-time high. And as Adam Meister on Twitter, the Bitcoin Meister at TechBalt, is always fond of saying, Bitcoin always returns to a new all-time high. And there's no reason to believe that history will not repeat, or at least rhyme. All right, well, we already did our stack. But I'm going to go over those stats real quick, because today is DCA Wednesday. And for those of you listening for the first time, you might be asking what DCA is. And DCA is short for dollar cost averaging. And dollar cost averaging is an investment strategy where you invest your money in equal portions at regular intervals, regardless of price. For example, this was our 64th stack. We started this podcast in July of 2021. And so far we've stacked 63 times. Just stacking $20 at a time, we've stacked $1,260 US, including $28.35 in fees. And that got us a stack of 3,663,331 sats at an average cost basis of $34,394.93. Today we invested another $20. And the reason we invest $20 is because I wanted to show that even for the average person that can only afford $20, eventually, over time, that $20 will add up to a decent chunk of Bitcoin. We've already shown that in just about a year, and we don't intend to stop anytime soon. Bitcoin is a long-term play. Anybody that will tell you anybody out there, any of the influencers out there will tell you that you should plan on holding Bitcoin for a minimum of 4 years. Most of them say you should be planning on holding Bitcoin for a minimum of 10 years. The maxis, the hardcore Bitcoiners, will tell you should never plan on selling your Bitcoin, because at some point in time you'll be able to use your Bitcoin instead of selling your Bitcoin. There's a famous Matrix meme out there that says, Neo says, are you telling me that one day I'll be able to spend my Bitcoin or convert my Bitcoin to US dollars? And he says, no, Neo, I'm telling you one day you won't have to. And hopefully that'll be the case. If you believe in hyper-Bitcoinization, maybe Bitcoin doesn't become the global dollar, the global system for the global unit of exchange. But there are ways that you will be able to use Bitcoin in the future without exchanging it for fiat money. Along those lines, that $20 got us another 101,997 sats and that was at a price of $19,167.21 per Bitcoin. That brought our stack up to 3,765,328 sats. Perhaps as importantly, it lowered our average cost basis dramatically again to $33,463.22. That's the really cool thing about DCA. Not only did we buy the high on the way up, but we've also bought the low on the way down. If Bitcoin continues to go lower, we'll keep continuing stacking and each time getting more and more Satoshis for that US dollar. And hopefully Bitcoin continues to go sideways for a while, because it would be fun to get our dollar cost average down a little closer to $20,000 a Bitcoin. But in the grand scheme of things, none of that matters, because when Bitcoin is sitting at an all-time high, a new all-time high, an average cost basis of $33,000 is not going to be too shabby. For example, if you believe that Bitcoin will hit $1 million one day, and I heard Greg Foss say just the other day again that he thinks Bitcoin's fair market value will be $2 million one day in current US dollar terms, not even taking into account the fact that the US dollar will continue to lose its value, but adjusted for inflation, Bitcoin, he believes, will have a $2 million valuation. But even if it just hits 1 million, our current stack would be worth $37,653.28. And there's nobody out there that could argue that would be one heck of a return for just $1,000 invested so far. And as they say, you do you. We're stacking $20 because I want to show that even $20 is worth investing. But, if $20 is nothing to you, then maybe you're DCA more. Again, you do you. Pick a dollar amount that you feel comfortable with, and an interval that you feel comfortable with. We chose weekly. Some people choose to invest on their payday. For a lot of people, that's bi-weekly, so that's just fine. The idea, though, is that you're consistent. And as they say, time in the markets beats timing the markets every time it's tried. And with an asset like Bitcoin that has been up and to the right consistently, of course, it has its crashes. Every 4 years, it goes through a bull and bear cycle. But over time, it's been consistently increasing in value. And if it continues to do so, then we're not too late, and you'll be happy that you got in. If you are not already doing so, please consider following us on Twitter. On Twitter, I am at BTC Bulletin Pod. That's at BTC Bulletin Pod. Please let us know. You can DM us or hit us up on Twitter and let us know what you think about the podcast. If there's something you like about it or something you don't like about it, something you'd like us to cover, I am really interested in hearing what you have to say. It's really flattering to hear from listeners. We've got listeners from all over the world, which is really cool. Everybody has a different perspective depending on where you live. And I'd really like to hear yours. So please hit us up on Twitter at BTC Bulletin Pod. If you're not on Twitter, or if you'd rather send an email, my email address is bitcoinbulletin@protonmail.com. That's bitcoinbulletin@protonmail.com. So send me an email and let me know what you think. Of course, if you want to support the show and you're listening via your favorite Podcasting 2.0 app, you can send us a message on Fountain. And when you send a message on Fountain, that's using the Lightning Network, so it's called boosting. It's a boostergram, and you can send sats along with that message, and it can be whatever you feel that is worth it to you. It's a value for value model. If you feel like you've gotten, a certain number of sats worth of value entertainment out of listening to this podcast and want to help support us, you can do so. You can send 1 sat, 10 sats, 100 sats, 100,000 sats, whatever you feel is appropriate based on the value that you got for listening to this podcast. And that is in the form of a message. So you can give us a shout out, let us know what you think. You can give someone else a shout out, pretty much whatever you want to say, as long as it isn't an advertisement, a shill, anything profane or something that's so horrific it might get us banned. And other than that, if you do send us a boostergram, we will read it on the next episode. And thank you for supporting the show. We did stack today using the Cash App. They are not a sponsor of the show, but there is a referral code in the show notes. If you don't have Cash App and you want to use Cash App, please consider using that referral link. Doing so, you'll get $5 free for doing so. We'll get $5 free too. So that's like getting paid to tip us. That's even better than sending us a boost, because not only are you helping support the show, you're going to get $5 free for doing so. There's some other referral codes in the show links. Again, do you pick an app or an exchange that you are comfortable with that suits your needs. But if you do want to use one of the services that we have a referral code for, again, they're not sponsors. Anybody that has an account with those services has their own custom referral code. But if you use our referral code, that would be a great way to help support the show and get paid to do so. Once again, please hit us up on Twitter. Please like and subscribe. Please follow us. We are at BTC Bulletin Pod on Twitter. And again, our email is bitcoinbulletin@protonmail.com. But don't forget to join us this Wednesday and every Wednesday for our DCA Wednesday episodes. But until then, keep on stacking those sats, you sexy sat stackers.